Good morning and welcome to the FP Markets Daily Market Update. And it's been a choppy one in currency world and a great one, I suppose, for equity bulls. Federal Reserve, obviously, overnight, and we've got, I suppose, a little bit more of a hawkish stance than most people expected, and the market's been a bit choppy on the back of it. But Wall Street overall enthusiastically embracing I suppose, speeding up of tapering and increased expectations of rate hike, at least one coming, or most Fed members feeling that one's coming in 2022, and the possibility, I suppose, of even more. As you can see here, Nasdaq finished up 2.3%, S&P up 1.6%. So a cracking day, and Bourses back challenging those historic highs again. It's like it just won't stop, will it? When we're out there. So I mean, here's the chart on the S&P, as you see, back around 4,710 really, back up to those historic highs, and that's across the board, although ASX has just opened up 2 doors down from me, and slightly off, so a little bit more of a conservative start here in Australia, not taking that massive lead from what we got, and I think this is the sort of regional differences that we're gonna start to see across the board coming into 2022. So let's just have a quick run through the currencies, because it was a bit choppy for currencies. Some of the data out last night was probably not supportive of that hawkish stance from the Fed, but the Fed are clearly surging forward. So core retail sales and retail sales out in the US both came out disappointingly lower. So 0.9% expected on the core and 0.8% expected on the regular, and 0.3% were the results for both of them. So much lower than expected, and I think we're still going to see these sort of choppy numbers coming around. And earlier on in the day, the CPI year on year out of the UK was stronger than expected by 0.3%. So expected at 4.8%, came through at 5.1%, and sterling was choppy as well last night. So I'll just run through a few of the moves in the currencies for guys that got moved around. So Aussie, and this is replicated across, it's mainly been a dollar move overnight, but as you can see, currencies under pressure initially, and then the Fed came through and dollar selling came really on the back of those stock markets accelerating, I think. So a little bit of correlation sort of moving up, but generally if we'd got that hawkish stance, you'd expect that dollar to come in stronger, and initially it did, but then massive rebound. So look, down here in the Aussie, for instance, and I'll show you in the cable because it's probably a much better example of what we got, but down to 70.91, so like very close to the previous low 70.88 that we saw just a couple of days ago, but back up all the way to 71.70 now. Similar moves across the other majors. Kiwi traders out there, we've had a little bit of a move today as well, but as you can see, similar pattern on the back of the dollar move. This morning we did get some Kiwi data coming through, so GDP, the quarter-on-quarter stuff, expected to come out minus 4.1 and came out minus 3.7. So that's sort of helping a little bit of Kiwi strength. As you can see here, Aussie Kiwi flirting with that moving average as well. So keep an eye on that. Aussie Kiwi bounced nicely off that trend line support that it had down well under 104. Moving across, sterling, as I said, was a big mover on the day. And as you can see here, I've brought my hourly chart in pretty tight to show you exactly what we had. I mean, over the last couple of days, and this is one of the reasons why we've seen sterling as one of our most popular products and the most highly traded, because we are getting decent moves from it. As you can see here, up to 132.80 on the back of the that GDP data I was just talking about. Fed comes through, a little bit of realization, bang, down to 131.70 and all the way back up to 132.70. So massive volatility on the day for sterling, and that's why it's such an attractive product. Probably going to continue. We've got more out tonight, so I'll come back to that later. Euro, a little bit more conservative, I suppose. Not seeing the size move, but once again, you know, oscillating around just above 112.50. We came down to a low there at 112.20 and up to nearly 113, the figure at the moment. So plenty of moves coming through. Here's that dollar yen move. That obviously that move's reflected nicely in there. But once again, strangely enough, not seeing as much volatility. Sterling seems to be the favourite, and second favourite, I think, CAD. So CAD really sort of went to its lowest level on the year, I think. And let's have a quick, yes, it did. Up at where we're looking here, nearly 129.50, and then we got that that move where the currencies accelerated to the top side. Oil helped as well. We're back down, and look, just for those having a little look at these short-term resistance and basic resistance and support lines. There's the former resistance that we had, and lo and behold, good break to the top side. So trading quite nicely technically at the moment, CAD, and it's found a little bit of support on that former resistance. So keep an eye on that one. Swissy, as you'd expect, sort of the inverse of that euro move. Once again, getting a little bit of volatility, good for currency traders out there. I'll just skip over to this. Gold still relatively for gold. Nasty little move, but if you can see here, it just sort of it found support, this longer term support line that we've had for a while. It's been trading in this channel for the whole year, and it's getting squeezed now. I've sort of been saying I think we're gonna have to wait till the new year for the break, but maybe we get it just before Christmas. Don't forget, we've got 2 weeks to go, and liquidity will start to thin. We could start to see some nasty whippy moves in that, so plenty to take advantage of. So as I said earlier on, it's a big day for markets today. Big day, certainly for us in Australia, because we've kicked off with the Fed. But as we move through the next 24 hours, we've got a lot more central bank action coming through. So first up for traders in Australia, in 45 minutes, we've got the employment change. That's expected to come in with around about 203 new jobs created on the month-by-month base, on a monthly basis. 5% the unemployment rate. So once again, all of these figures, we're getting quite a lot of divergence. We're getting volatility in the figures, and that can translate through to some really good short-term trading opportunities in the currencies. First cab off the rank in terms of central banks tonight. Swiss National Bank, the SNB, keep an eye on there. They're expected to keep their policy rate constant at minus 0.75%. They will be concerned, and we've highlighted this a few times with the currency. It is on multi-year lows, and they are concerned with the strength of the Swissy there and how it affects the economy. We know that they are not scared to come into the market. So keep an eye on that as well. It's it could be interesting. I'm keeping a close eye on that Euro Swiss and seeing if they mention it. There could be some jawboning to try and get that back up. So second cab off the rank, the Bank of England. They're coming through for us here in Australia at 11 p.m. I can't do everyone's conversion, but it could be a very big event as well. Expectation official bank rate will still stay at 0.1%. Keep an eye on the bank rate votes. That's sort of the key difference. Obviously, the bank rate initially. The votes could be very key. 207 at the moment. Expected to remain at 207. If there's a change there, that could see the sterling once again off to the races. Obviously, if there's a change in interest rate, that could also occur. Next cab, there's plenty of cabs coming off the rate. ECB press conference, that comes only 45 minutes after the Bank of England, so plenty of action in that European time zone. So that's the interest rate statement. Obviously, keep a very, very close eye on what's going on there. Be interesting to see what we're going to get out of Europe. Really, I suppose the expectation is for steady as she goes. Data's been getting a little bit stronger in Europe, but we've seen a massive increase in COVID cases. We're seeing it here in Australia today. Remarkably less people on the road. So that can kick through to the economy because it's the Omicron variant. There's been volatility coming from those headlines with COVID, but Omicron still doesn't seem to be putting too many people on hospital, which is obviously a fantastic thing. But we're not getting those massive moves in the market. Later on, and it's tomorrow, which is the final cab off the rank, and we get the BOJ. So expect a little bit of movement, but once again, not really too exciting. Probably the least exciting of the G7 central banks because they've been down near zero for so long. But plenty of opportunity to trade tonight. And as you can see, we're trading off some of these levels really well. Break trades or just keeping it in the ranges could well be the way forward. But I think today's going to be a big day. I think we're going to see some movements. This is where we're starting to see divergence of opinion from central banks. And also, of course, beware of these stock markets. They're at all-time highs, but we are getting a more hawkish Fed. So I think a few commentators are a bit surprised to see such a positive reaction from the US markets, and maybe we're seeing a more subdued and maybe even a more correct response from the guys down the road, with them not too impressed with the Fed. And we're just sitting slightly down on the ASX, and that will obviously kick through to the rest of the products. It's going to kick through to the bond markets. It's going to kick through to the currencies as well. So they're just having a quick look on the US 10 years as well. They're hovering in around 146.30 at the moment. So keep an eye on those. They're probably going to give a little bit of short-term direction for the currencies. Just one other currency to just keep an eye on. The poor old Turkish Lira has been smashed yet again. Talk of central bank intervention around this, and as you can see here, I'd had to go to the old Fibonacci projections to see where we might cap out once this move broke through historic highs. It did find, interestingly enough, it did find a little bit of resistance around this sort of 161.8. Those interested in Fibonacci's will know that they're sort of key numbers. Normally it's the 61.8 and 38.2. On the extended projections, it goes out to the 161.8. And then look, the next level we've got is all the way up at 16. It has taken another smashing again. So anyone trading that, be careful. Look, watch your leverage, position size, capital management. Obviously, there's fantastic opportunities. We've seen huge moves in it, but it is not one for the faint-hearted. So good luck today, guys. If you've got anything you need from us at FP Markets, please do give us a shout. But have a cracking day, and as I said, good luck with this one. It could be a really good day for traders, I feel.